Ready to dive into the wild world where crypto meets the macroeconomy? It's like watching Bitcoin hang out with Wall Street. Chaotic, unpredictable, but oh so fascinating. Let's break it down. First up, inflation. Crypto's unpredictable party guest. When inflation spikes, people flock to Bitcoin, calling it digital gold. Why? It's seen as a hedge against the declining value of traditional money. Then there's the role of central banks. When interest rates rise, borrowing gets expensive, often cooling off crypto markets. But when rates drop, it's a party, with crypto surging as people seek higher returns. Crypto isn't just reacting, it's shaking things up too. Sending Bitcoin is faster and cheaper than traditional bank transfers. Plus, no awkward questions like, what's this payment for? DeFi, or decentralized finance, is disrupting traditional banking. Why use banks when you can lend, borrow, or earn interest directly through blockchain tech? The game is changing fast. So what's happening in 2024? Governments are scrambling to regulate crypto, trying to tame it like a wild stallion. At the same time, they're launching CBDCs, central bank digital currencies, as state-backed stablecoins. Meanwhile, Bitcoin is moving in sync with the stock market. It's rubbing shoulders with traditional assets, becoming a player in the broader financial world. The future? Experts predict an even closer tango between crypto and the macroeconomy. But remember, crypto remains volatile. Tweets, inflation data, and rate hikes can all send it spiraling. Stay informed, stay calm, and think long-term. That's your quick dive into how crypto and the macroeconomy are shaking things up.